Hello everyone, welcome to this trade breakdown on EU. In this breakdown, I'm going to take you through a trade that I took on Thursday, April 17th. I'll go over the thought process, the rationale, the reasoning, the narrative, and the full market context behind it, which led me to taking this trade. By the end of it, you'll know exactly how it all came together. If you watched my daily outlook that I uploaded on Wednesday, then you'd already know that my directional bias for the rest of the week was clearly bullish. That was obvious to me from the way the high time frame was behaving, and I already explained that in the week low. So if you're not familiar with that, I'd recommend watching it. Because of that outlook, heading into Thursday, I was only interested in looking for longs. That was my initial plan. Now you can see that I already had the directional bias. So my job on Thursday was simple. I was waiting for the market to give me proper context. I needed a valid framework to build a trade idea. I wasn't just going to jump in blindly just because I had a bullish directional bias. What I did was mark out this 4-hour fair value gap as my key level. I annotated it, and my expectation for price was to come down, test this fair value gap at a key time, and from there I wanted to see an order block confirmation entry. Let me show you this so you can see it more clearly. Going into the first half of the day, my original expectation was for price to come down and test this 4-hour fair value gap within this 4-hour order block. From there, I was anticipating an expansion higher. My plan was to look for an order block confirmation entry from this zone. That was the original setup, simple and clean. But while I was waiting for that scenario to play out, something changed in real time. What happened was that we had a divergence. Actually, we had two of them. One with DXY and another one with GU. On DXY, what happened is that, let me show you. DXY filled this fair value gap, aligning with our corresponding fair value gap, whereas EURUSD failed to do so. EURUSD did not respect or fill its corresponding fair value gap, which led to a divergence between these two assets. Because of this divergence, I changed my initial thought process. I adjusted my expectations and decided to take an entry straight away, without waiting for price to retrace deeper into this fair value gap. Given the divergence, I believed that price might expand directly from its current level, without completing a retracement first. At the same time, we also had another divergence occurring with GBP/USD. If you look at this price action right here, what you would see is that GU took out this low, whereas EU failed to do so. This meant that, again, we have non-symmetry between these two correlated assets, and consequently a divergence between the two. Because of these two major SMT divergences, I changed my initial expectation, changed my initial anticipation for EU, and concluded that we could have a potential immediate expansion from here. Then right at that point, I started looking for an order block confirmation entry on the lower time frame. Looking at this 15-minute time frame, what you can see here is that the SMT with DXY formed right at the open of the London session. Once we had that expansion higher during the London open kill zone, I concluded that maybe we had already formed the low of the day with this candle right here. After seeing the SMT divergence with DXY and the other one with GU, I thought and concluded that we could potentially see an immediate expansion higher from here. In that particular scenario, I considered this move right here as my manipulation profile below the Asian range. That meant we also had the normal protraction profile in place. Even though we didn't get a test at the fair value gap at this point, because of those two major SMT divergences, I had strong conviction and confluence in this trade idea. That led me to take a trade on the 15-minute time frame. Obviously, before I could enter the trade, I needed a lower time frame order block confirmation to set up. In this particular scenario, you can see that we have this single candle, and then these two consecutive candles that purged below the Asian range low. In this case, I wanted price to engulf those candles by closing above them. Once price did close above these two consecutive candles, I decided to take the entry. I entered right here after the order block was formed. I executed the trade with my stop loss below the order block and targeted a 3R trade. Now that trade didn't work out, as price eventually came down lower and stopped me out. But here's the thing, it was a completely valid loss. It was a high probability setup that aligned with my system, aligned with my model, and met all the criteria I look for in a trade. And that's what matters to me. I know I don't need to be right every time. I just need to be consistent in following my plan. That's exactly what I did on Thursday, and that's all that matters to me. So even though it was a loss, it was still a winning day in the sense that I stuck to my plan with discipline. If I see that setup again 100 times, I'll take it 100 times. That's how trading works for me. Like I've said before, my edge is in sticking to my framework over and over again, because I know that's where profitability comes from, and that's where consistency is built. So for the week, I ended up taking just 2 trades. The first one was on Tuesday, a clean 3R win. The second was this structured loss. The outlines for both trades were shared in advance inside the group, and a lot of you even caught those setups with me, which is great to see. Just like that, I ended the week with a 2R profit.